ko naman na walang sakit si Clarice.
Ano, maarte lang.
Okay, can you hear me? Can you hear me?
Yes, yes, very clearly.
Okay, no problem. Okay, let me check. So I'm still uploading the video. Okay, I think it's already uploaded. So maybe I will send the link to you now. Or maybe it should be after the class. Okay, let me send the link to you. Okay, I've already posted the link on WhatsApp. So you can go there and check the link. So the video is already uploaded. Okay. Now, this is the talk session of this class. Okay. And let me see some questions before we move on. Okay. I got a question here that says, close with no rejection. What is the interpretation here? Okay. I think most of you have seen the message. It closed with the bearish candle closed with no rejection. And what is the interpretation here? The interpretation here is that buyers are not interested in the market. Okay. Buyers are not interested in the market. That is why the bearish candle closed without rejection. And you can see that even the second bearish candle buyers try to dominate or buyers try to go more up. Buyers try to enter the market, but still the previous candle is showing buyers that no, they will not agree this time. So it closed with no rejection, means that buyers are not interested to enter the market. So it's a continuation sign of the previous bearish trend. That means it will continue the market to the next level. So it's a continuation sign, the Marbozu candle. Okay. And let me see the second question. Okay. So say I'm aligned. Okay. I thought the highlighted candle will go bullish since the previous close with rejection. Yes, it's supposed to go bullish, but there are some reasons why it didn't go bullish. Okay. The second question. You say, I thought the highlighted candle will go bullish since the previous candle closed with rejection. It won't go bullish. On what reason? How many reasons? Number one, the strong sellers, a power movement of sellers to that level. Number two, the sellers break the level. Number three, buyers are not interested. And number four, a minor downtrend. These are the reasons why the next candle formed a bearish candle. Okay, so buyers will not enter the market. So the buyers try to enter the market. That's why you are seeing a small bearish candle. So buyers try to enter the market. Now at this time, you should know that after this small bearish candle, the next candle is supposed to be a bearish, because buyers try to enter the market, but because of sellers, strong sellers, so sellers still form a strong bearish candle. Sellers still form a strong bearish candle with a rejection, though it's weak. It's weak because buyers try to dominate the level, but sellers still try to form a bearish candle. That's why the next candle form a bearish, the last candle. Okay. Okay. And another question was that did not break the trend line and with a rejection. Was this trade proper? Yes, it did not break the trend line and also it closed with a rejection. So it means you have so many reasons to go with buyers. Number one, a strong buyers movement on the left side. Number two, a strong rejection from buyers. Okay, the screen share. Let me check. Somewhere here. Okay, I think now I'm on it. Okay, it's the question that I saw in the WhatsApp group. That is what I'm trying to explain. And can you all see the screen very well? So I'm on it now. Can you all see the WhatsApp group? Okay. So the first one was that he has a question that let me do it very well. He has a question that close with no rejection. What is the interpretation here? The interpretation here is that it close with no rejection. Number one, if you want to go with sellers, you must have some reasons. Number one, a strong downtrend. Number two, it's a strong bearish candle. And number three, close at the buyer's area without rejection. So now you should go with sellers. Now, if you want to go with buyers, number one, at the buyer's area, you close at the buyer's area. So that is the only reason you want to go with buyers. But 3 against 1 is short. You have 3 reasons to go with sellers and you only have 1 reason to go with buyers. Because here the candle close at the buyer's area. So, and there's no rejection. So it is only 1 reason that you should go with buyers. But because you have 3 reasons to go with sellers. Number 1, a downtrend. Number 2, a strong candle. And number 3, close at the buyer's area without rejection. So that's why the next candle will be a bearish. So it's a strong candle. It's showing confidence that it's going to dominate the buyer's entry. That's the interpretation. And the next question is, am I lying? Okay, I thought the highlighted candle will go bullish since the previous close with rejection. Yes, it's supposed to go bullish, but we have so many reasons why it shouldn't go bullish. Number 1, the trend is downtrend. Number 2, a strong seller's movement. Number 3, it broke the buyer's entry point. The buyer's entry point closed below. It closed below the buyer's entry point. So it means, and number 4, the candle is a very strong candle. So it means that at this time, the buyers with the sellers will still form a bearish candle. But if you want to go with buyers, number 1, this is major uptrend. Number 2, it only got rejected from buyers, rejection from buyers. So this is the reason why you should go with buyers. But 3 against 2, the buyers has 2 reasons why you should go with buyers, why the seller has 3 reasons to go with sellers. So 3 against 2, so you go with 3. That means the next candle will be a bearish. And here I was able to indicate the 1-2 move here. The 1-2 move. So what I said that the 1-2 move is above. So a strong bearish candle break the 1-2 move without rejection. It's a trend continuation. The Mariposa candle. Okay, the next one is that this. I'm aligned, okay. And what is the question? The question is did not break the trend line and with the rejection, was the trade proper? Yes, it's proper. Number one reason why you go with call option is that number 1, previously you can see a strong buyer's movement. Number 2, a major uptrend. Number 3, rejection from buyers. And number 4, it closed at the buyer's area, buyer's entry point. So buyers has 4 reasons. Now let's look at the sellers. Number 1, you can see a minor downtrend. Number 2, the sellers make a new low that crosses the buyer's area. So I think that is the only 2 reasons. So buyers has 4 reasons and sellers has 2 reasons. So that means you go with call option. Then the next one is, okay, I have already explained that. Okay, the next one is, could this have been a bullish? No, it wouldn't have been a bullish. Did not break the level, however, strong. So could this have been a bullish? No. Number 1 reason is that Why it shouldn't be a bullish is because of strong sellers movement. One. Number two, it closed with at the sellers area, at the buyers area, with a very small rejection. The candle is very strong, but it closed at the buyer's entry point with a very small rejection. So buyers doesn't have enough rejection, enough power to reject the candle. That is number two. And what again? The previous candle is a very strong candle. That is number three. Then, if you want to go with buyers here, if you want to go with buyers, strong uptrend, and again, very small rejection. So these are the reasons why you should go with sellers. Sellers has 3 reasons, and buyers has only 2 reasons. So you go with sellers. And the next question is, okay, I've already explained that. Yeah, I've already explained that. You can see the sellers entry, previous sellers entry are very weak, but now the sellers try very strongly with a strong force to break that level. And what happened? They finally broke the level. You see, they finally broke the level. And even buyers want to enter the market. So you will see that there's a small upper rejection in this candle. Means that buyers are here, they still want to enter the market, but because of this strong sellers entry, the sellers still push the market lower. Okay. Now, the second question, the other question is, what is fake buyers or sellers entry point? What is fake buyers or sellers entry point? There's nothing like fake buyers or sellers entry point. It is only a fake sellers movement or fake buyers movement that you can see in the market. There's nothing like fake buyers or sellers entry point. So it's only a fake buyers movement or sellers movement. And what is a fake buyers and sellers entry? How do you trade it? Okay, that is the video I want to send with you guys, and maybe after this section I will send it. I don't know, the network is very slow, so I was trying to upload the video since the network is slow. So how to trade, in that video I will show you how to trade on buyers and sellers entry points. This strategy, you can use it to recover your losses if you follow the rules. And again, how to trade new low on green candle in downtrend. Okay, how to trade on new low on green candle in downtrend is number one, you should have a downtrend. Let me share the whiteboard. Number one, have, let's say this is a downtrend. A downtrend is like this. Impulsive move correction, impulsive move correction. So this is a downtrend. And here, at this level, maybe the buyers are here, and the downtrend is still forming a movement here. Then on reaching this level, the buyers enter the market, and again, the sellers still form a bullish, a new low here. Means that new low is when the buyer's entry point is far from the body of the candle. So it doesn't matter the body, it doesn't matter the color. So a new low is where the buyers enter the market. This is just a level, not area, just a level. So the main sellers buyers area is the new low, is the weak, the entry point. So now this bullish candle make a new low. So because of this strong sellers entry, strong sellers downtrend, they will use the opportunity of this new low to form a bearish candle. Okay, I think we should check that. Let's see that in the chart. Okay, looking for a bullish new low after a strong downtrend. This is a minor uptrend, so a bullish new low will not work here. Yes, there's difference between level and area. Level is where most of the time I call it reversal area or reversal level. Level is where the market reverses so many times. Look at this chart. Look at this chart. If you want to find a level here, you want to find a level, you can see at this level there are so many reversals. There are so many reversals. So this is a level. And again, at this level, there are so many reversals. So this is a level. For these entry points, this lower point, lower price here, this lower point is a next buyer's area. But here you can also say this is also a buyer's area because of this lower wick. So it's a buyer's area, levels. But here the body, maybe the body is touching so many candles, the line is touching so many body, on all the candles, so it's a level. Level is where the market reverses so many times. So that's why you call it SNR levels. Like this one now, this is the support level. So you can see it become a resistance level. The support level become a resistance level. So if you want to draw an area, you just draw it like this. Support level that become a resistance, then resistance again that also become a resistance, a support. Support level that become a resistance, resistance again that also become a support. So these are levels, a strong reversal zone. In Forex, we call it a zone, a strong reversal zone. So that is the difference between levels and area. It's an area, but levels is where the market reverses multiple times. And here also, this is a buyer's entry point. So buyers are here. Also, this is just a level, not buyer's area. It is only because it will only become buyer's area when you see so many lower price here. This is also a buyer's area. It means that buyers change their entry from this level to this level. So buyers change their entry from this level. So this is also now a buyer's area. And again, buyers change their entry from this level to this level. So this is also a buyer's area. It means that again, buyers change their entry from this level to this level. So this is now a buyer's area. So it means that from this place to this place is a buyer's area, and any candle that comes to that level will reverse. Any candle that comes to that level must reverse. Do the line very well. You can see this one reached that level, it reverse. This one got rejection and reverse. This one got closed exactly at the level. This one also got rejection and reverse. Buyers rejected it, but because of strong sellers, it still form a bearish candle. This one closed exactly at that area, it reverse. You can see now buyers show the weakness in that area. That's why you're seeing some sellers entry here. So this is a strong, from this level to this level is a strong buyers area. So this is how to find buyers area, buyers and sellers area in the market. So I think let me see some more questions so that we. Okay, how to trade new high and a new high is the same thing as I've explained at the one of the bullish one. Then, okay, about how can we use to trade? Okay, say about pressures, how to trade with pressure, and what are the rules to use new low or new high. Okay, and this one, okay. Now, this bearish candle make a new high at resistance. So should we consider this candle as a reversal candlestick or not? If we look at the market is following a 1-2 move here. So this new high will not work here because the market is respecting this 1-2 move, this pattern here. That's why you're seeing that after this candle, the next candle form a bearish. So the new high will not work. Yes, there's a new high in the market, but this is not where the new high will work, because previously you can see a movement, a seller's entry here, a movement, a 1-2 move. So we consider it as a reversal candlestick because this is a reversal candlestick in pattern with a new high. So it reversed the market. While sometime after breakout, we have the same candle before it continues. After breakout, we have the same candle before it continues. Is it continue downtrend? I don't understand the question, right? Is it continue uptrend or continue downtrend? Reason why, if it's continue uptrend, number one, you can see that the buyers try to go more of that. Buyers are entering the market from this level very strongly. Now, it broke this level with a strong body. Most of the time, a strong candle is a reversal candlestick, but in different market situations, it doesn't work like that. So it is not a law that all strong candle will be a reversal candlestick. So it depends on the type of market. So I will show you how strong candle can reverse the market. But here, it doesn't reverse the market. At least a small candle will form before it reverses the market. So the law of this market is that after a breakout, there must be a weakness of buyers. And what is the weakness of buyers? This small green candle. That's why it reverses the market. Okay. Okay, now I think we're done with that. Now, okay, I think we are talking about today's session, which is for me. Okay, the today's session is trading with the trend and reversal candlestick versus continuation candlestick, and observing the momentums and chart patterns. Okay, let's first discuss about trading with the trend. Whenever you are trading with the trend, you should follow the market rules. You should follow the market rules. And what are the market rules? Follow the trend. That is the market rules. Follow the trend. And how will you follow the trend? It is not that when you are seeing a bearish candle forming, then you want to continue be placing a put option, just to say you are following the trend. That is not how to follow the trend. That is not what we mean by following the trend. Following the trend is, most of the time, it works 100% on forex, but in binary options is another different situation entirely. So following the trend simply means if it is an uptrend, you should look for a call opportunity. If it is in downtrend, you should always look for a put opportunities. This is how you can follow the trend. And most of the time, you watch my videos that once I start trading, I will just catch up a movement, like a bearish movement or a bullish movement, and I continue placing a put option, or a call option, and all C gave me a winning trade. Because the logic is there is that, number one, I will look at the trend. Number two, I will follow the trend. I will not go against the trend. Number three, then I will look at the market structure. I will look at the market structure. Where is the nearest level? Where is the nearest level? The nearest possible of reversal, where the market will reverse. Okay, coming. Okay, give me some minutes. Okay. Okay, give me some minutes. I'm coming. I'll see the call now. If you are following the trend, you should look for maybe a downtrend. You should look for put opportunities, or in an uptrend, you should look for call opportunities. This will give you the strong reason why you are following the trend. And most traders lose their trade because they go against the trend. They don't follow the trend. And if you see a strong downtrend, there are different ways to trade the trend. Number one, if you see a strong downtrend, let's say the strong downtrend is like this. Maybe the market is moving like this, 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 like this. And you want to be following this trend. What you do is, there are two ways to follow this trend. Number one, it is either you take risks to follow the trend. Number two, is either you wait for the right opportunity to follow the trend. Now, how do you take risks to follow the trend? Number one, once you see a movement like this, so you continue, maybe you have $10 in your account, $10 in your account, and this $10, you only invest $1. Again, you invest $1. That means you are following the trend. Invest $1, invest $1, invest $1. So you don't know that the market will still reverse. And again, you still start investing $1 as a put option, but you are losing all this trade. You are losing this one. So again, you still place $10, $10, $10, $10, $10. That means the losses you have here, you still recover it here. Again, now you think that the market will still go more down. You are still placing $10, $10, $10, $10. But what happened? You still lost all this. So this is a risk trade when you are trading like this. So number two, it is either you trade using let's say a patient, or you wait for the right moment. Don't go against the trend. Wait for the right moment. This is what will make you be profitable in the market. Most of the time, if you see me trading, let's say, if you see me trading like this, maybe from this level, I just saw the market like this, then I start placing put option, put option, put option. Again, I know that the market will pass, I place a call option. Again, I place a put option, put option, put option. The first thing I do is that once I look at the market, once I zoom out, I've already saw the whole chart. Okay, in my network problem. Once I zoom out, I've already saw the whole chart. I've already seen the whole chart like this. This is the whole chart. And what happened here is that I saw a strong downtrend. A strong downtrend. And the price was here. The major trend is down. And the price is here. The current price is here. And again, the minor trend is up. So one thing I do is that before I start predicting the next candle, the first thing I do is that, yes, the downtrend, and again, I will look at the current market now, I saw a minor uptrend. Now I want to start predicting a put option. Now what I will look now is I will look after this candle. I will look at it that yes, we have some buyers entry here, but it broke the buyers entry. And again, the next level is here. The next possible of reversal is here, which I'm expecting that, okay, from this level, I saw a strong bias. And this candle already showed to me that it formed, this candle already showed to me that it formed as a full confirmation of sellers movement of the downtrend. Why is it a full confirmation? Because previously I can see a weak bias, means that the buyers are weak. Now I saw a strong bearish candle after a major downtrend. So this now gave me strong confidence that the market will start going down here. The market will start going down. So and I count this market as a bearish engulfing, which I know that the next level is here. The next possible of reversal is here. So I will place a put option. Now the candle close at the level with a rejection. So I will now look at it that what are the next thing to do? Yeah, I have so many reasons why I should go with put option and some reason why I should go with call option. The first reason is this for put option. Major downtrend, previous strong sellers entry, and again the last candle is also a strong sellers entry, and again I can see a sellers movement. Whenever you say seller movement, it means that sellers still want to go more down. But here I saw, you can see I have one reason, the trend, the major trend, a strong sellers, two reasons, and again the strong sellers candle, three reasons. So I have three reasons here to go with sellers. Strong candle with a rejection, three reasons. Now for buyers, I only have uptrend, buyers area, and the rejection from buyers. So I have three reasons from buyers and three reasons from sellers. So I will now weigh the two together. Which one should I go first? Then I will analyze the market again. So as I'm explaining this to you, I do it sharply that you most of the time nobody will know that this is what I'm doing. I will just look at it. I'll just look at the market like this. Again, zoom it. Again, like this. Again, zoom it. That means I'm capturing what is happening in the market. So I will now analyze the market again. Number one, I have three reasons of going with buyers. The first analysis, then three reasons of going with sellers. Now, I will analyze again. Downtrend, strong sellers entry, the previous candle with a selling pressure. That is 3. Downtrend, strong sellers entry with selling pressure. 3. Again, a strong bearish candle close at the buyers area with a rejection from sellers. That is 5. So now I have 5 reasons to go with sellers. Now I will now analyze the buyers again. Uptrend, 1. Buyers area, strong buyers area, 2. And then rejection from buyers, 3. That means I have 3 reasons. I still have 3 reasons to go with buyers. And here I have 5 reasons to go with sellers. So it means that I will place a put option here. And what happened? Like I said before, that when you have 50-50 reason to go with buyers and sellers, it is either you don't trade or you still analyze the market again. Look at what happened here. because of the 3 reasons for buyers and 3 reasons from sellers. Buyers still want to go more up from here. But on reaching here, it rejects the market. The sellers reject the market and form those as a bearish candle. So here, from this point and from this point, from this point and to this point, the sellers and buyers are the same. This is the psychology behind this. So this is what I'm explaining. So the buyers and sellers are the same. Buyers try to push up, but rejected from sellers. Sellers still form a bearish candle, reject the market, and form a bearish candle. So it means that here, at this time, the sellers are more stronger than buyers because they have 3 reasons in the first analysis, and then now analyze it again. Sellers has 5 reasons, and buyers have 3 reasons, still 3 reasons. So I go with sellers. After seeing this strong rejection from sellers, so I go with sellers again. I'm doing all these things sharply. I don't waste time in analyzing the market because I have experienced so many things in the market. I can just view the market and then start predicting. Now I place a put option. Then on reaching here, I will look at the left side. Where is the next possible of reversal? The next possible of reversal is here. See, I will have my reason why I will go with sellers again and why we go with buyers. Number 1 reason for buyers is uptrend, minor uptrend, buyers area, and rejection. Then number 2, the second reason for sellers is major downtrend, strong sellers movement, rejection, a strong candles, that is a strong selling pressures, rejection from sellers, strong rejection, strong pressure from sellers, and close at the buyer's area with a strong body. So I have already have 5. That's why I go with put option here. Now the candle close like this, and here we have a buyer's area. This buyer's entry point, and here also buyer's entry point. And what happened? This candle closed at the buyer's entry point. The next candle form a bullish candle. Why? If you want to analyze it this way, downtrend, for sellers, strong selling pressure for sellers again, and then this candle close with a very small body because previous candles is a very strong candle, and this candle closed with a very small body with a rejection from buyers. So 1, the downtrend for sellers, strong selling pressure. That is 2 for sellers. Now for buyers, uptrend, buyers area, strong buyers area, rejection from buyers, and a weak bearish candle. So I have already have 4 reasons to go with buyers. That's why I'll place a call option here. So now, what I'm explaining this is that before you place your trade, make sure you have a strong reason of placing your trade. If you are confused about the trade, never you take trade. Never you try to trade. Just give yourself some minutes, give yourself some gap, then give yourself some rest to take your trade. And never you try, if you are just learning how to trade, never you try to trade on every single candlestick. Try to choose the best opportunities in the market to place your trade. And you should not go against the trend. Now, how will you trade by not going against the trend? Yeah, this is a minor uptrend, but you don't want to go against this minor uptrend. Number 1, wait for the candle to come lower, maybe to the buyer's entry point, then you place a call option. Sorry, I don't understand.
What I'm saying, sir,
Okay.
yes, is about the analysis before you place the trade, and then the purchase time is moving faster, like 30 seconds, I can say.
Yes, yes.
How can you? What is your advice now on how are we going to analyze this candle within the shortest possible time before placing the trade?
Okay. The first thing now you do that before you master a quick analysis, the first thing you do, go to there are different type of charts we have. We have the 5 second chart. We have, let me show you. We have the 5 second chart, 10 second, 15 second. Now, if you are not very sharp in analyzing the candles, you just go to 5 minutes. Then you analyze the market. Go to 5 minutes. Then 5 minutes will give you more time to analyze the market. And when you are trading 5 minutes, you should not use 1 minute expiry. You should not use 1 minute expiry. You should use 5 minute expiry time. And you may get confused that, yeah, you didn't know the exactly 5 minute time. Maybe this one is running, but all of them are running, but you didn't know the exact 5 minute time. This is what you do. This is 2230. Then you set it to 2230. Then you set it to 2235. So it's giving me 10 minutes. But let me check. Okay, I think because the market is not good. So it's supposed to give you from this 2230. We just click on this one, this plus sign. It's supposed to give you 2235. That means you have already set the market to 5 minute expiry time. So you should choose higher time frame. You can choose others if you are too, maybe you don't understand the market very well. Then you can choose higher time frame like 1 hour, so many like that. But if you want to learn or you want to be fast in trading, choose either 5 minutes or 2 minutes. Then when you master them and when you are confident in your analysis, then you can choose 1 minute. Before, when I start trading, I always use 5 minutes in analyzing the market. But when I start grabbing it, when I start knowing it very well, then I choose 1 minute. So 1 minute, I will just land at the market and just look at the market situation, then hit the next candle. There's no difference in 1 minute time frame, and the only difference is the candle. That is, look at this 1 minute. Look at this 1 minute. The 1 minute is like this. If you set it to 5 minutes, the market will be very small. So there's no difference when you're analyzing the market on 1 minute and 5 minutes or any minute or any hour you choose. There's no difference. It's just that the candles that form exactly at the end of 5 minutes. Each candle forms exactly at the end of 5 minutes. So within this 5 minutes, already there must be a 1 minute candle. There must be a 1 minute candle. That's why you see that this is a strong seller's entry. But if you change it to 1 minute, you will see so many sellers movement. You can see two strong candles, so many strong sellers movement here. So there's no difference in trading 5 minutes, 2 minutes, or 1 minute. It's still the same rules. When you apply the same rules and follow the market rules, you still got your winning ratio. So this is how you can analyze the market. Now, how do you follow the trend? This is an uptrend. And again, this is a downtrend. This is an uptrend. And this is also a downtrend. Downtrend. You can see the 1-2 move. That is, this is the seller's entry, where sellers are entering the market, and this candle break forming. Now, when you see this kind of situation, market situation, you should wait that if this candle will come below or close exactly at this point, I'll place a call. And if the market will close exactly at this point, I'll place a put option. This is how you can follow the trend. Here, this is an uptrend, and if I see any bearish candle that close at the level, I will place a call with a strong reason. And if I see any bullish candle that close at this level, I will place a put option. You can see here, close at the level, the seller center, and here also close at the same level, seller center, and here also close at the level, buyer center, and this one also buyer center. But in a situation like this, that where the market didn't reach this level, so you have so many chances that, okay, the market didn't reach this level, I will continue the market. But there are so many times that the market will give you a wrong move. Maybe, say for example, the level is here, and you see a strong candle like this with a strong rejection from sellers, and the next level is here. So you may say you want to place a put option here, but what happened? The market will fake you. The market will give you fake movement, and this is why this happens mostly in OTC market. The market will start going down. Maybe you have placed a put option, the market will start going down, start going down, start going down. Then on reaching this level, you saw a huge rejection here, and this candle will now close as a bullish candle. I don't think maybe you have explained that before. It will close as a bullish candle, but you are saying that the level is still far. Place a put option, but now the market is going to your direction. But on reaching this level, the buyers push the price higher with a strong force, and then the candle now close as a bullish, maybe a weak bullish, and you lost the trade. So for this, okay, so for you to escape this, I will show you one reason for you to escape this whenever you see such situation. Like now, if the buyers are strong here, if the buyers are very strong here, if the buyers are very strong here, this candle at form here that didn't reach this buyer's entry, it's supposed to go to this level, then reaching this level, then buyers will push up. So it means that the buyers are strong, but yet the buyers are not strong. Buyers are not strong. So that means this will not happen here. Let me show you some examples how to escape that whenever you see such. Okay, like this one. Look at this one. This candles. This bullish candle. Look at it. This is a Marubozu candle. Marubozu candle. Those are the sellers area. A Marubozu candle at the sellers area is a sign of reversal. But what happened? You place a put option, and the market start going down, On reaching this level, which was a buyer's area, immediately buyers reject the market, and it push up very strongly and then close as a bullish candle. That means you have already lost the trade. So for you to escape this, first look at the candles. The candle that usually form is something like this, with a strong buying pressure. Once you see a strong buying pressure like this, and maybe here this is seller's area, and you see a strong bullish candle. This is a bullish candle with a buying pressure. Okay, let me draw it very well. You understand? This is a level, a seller's entry point. and you saw a bullish candle like this, you saw a bullish candle like this with a rejection from buyers, and the next level is here. So for you to escape this, you just place a call option or you just place a put option. Maybe the seller's area is now here, and you place a put option, but instead the market still going down to your direction. On reaching this level, the buyers reject the market and then it start going up and then close as a bullish candle. For you to escape this, check this candle. You will observe something in this candle. This candle is very strong. One, this candle has a strong buying force, buyer pressure. Two, this is the reason why it happened like that. Number one, a strong candle and a strong buying force. So it means that if sellers at this area, we try to form a bearish candle here, on reaching this level, this is where it's supposed to stop. But within 1 minute, on reaching this level, the buyer push up the market. It means that this strong rejection here has already shown you that the buyers are strong. Look at this one. You can see a rejection here, and the level is here. But what happened? The sellers, you place a put option, sellers are still going down. So you are sure that the market will go to your favor. But on reaching this point here, it just goes up and then close as a bullish candle. What happened is because of this buying pressure, selling pressure, this rejection from sellers. That is why it happened like this. Once you see a strong candle, like this with a rejection, maybe from buyers and sellers, and the level is still far, it will happen like you just place a call option. It's the same thing as saying when you see a hammer candlestick. Most of the time, hammer candlestick also happen like that. But when you are trading hammer candlestick, you should make sure that the level is very far, not very near. Like now, look at this. There's a gap between the level. So if you place a put option here, the market will start going down and then push up. You have already lost the trade. So because of this rejection, strong rejection from sellers, so you try to go down here, but because of strong buyers area, the buyers will reject the market and form a bullish candle. So whenever you see this, you should always check the level first. If the level is very strong, check the levels and check the candle so that you will not have a losing trade. So whenever it happens like that, most of the time I also encounter such things, but when I understand their movements, I already know what to do when I came across any such situation. Like this one now. Now see, this is buyers area. Buyers enter from there, strong buyers entry. And this candle close exactly at that area. If you place a call option here, then on reaching this level, what happens? Reject. Means that this candle is very strong. One. Also, you can see a strong bias. So the strong buyers here, we try to form a bullish. If the buyers are weak here, if the buyers are weak, that means this candle will not go up to this extent. It will not go up to this extent. But here the buyers are very strong buyers entry. So buyers try to form a bullish candle. On reaching this level, where the sellers break the level with a strong body, sellers still form a bearish candle. So you might have lost this trade if you place a call option. But this is strong buyers here. You should know that yes, this is strong buyers. Buyers will try to push the market high, but this candle that break this buyers area is very strong. So it will not allow the buyers to go more up, but instead reject the candle, reject the market. So if you have this kind of, if you see this kind of situation, number one, it is either you take risk in placing your trade or don't trade at all. Wait for the right moment like this. When you see an uptrend like this, wait for the candle to close at this level with a rejection. The trend, you should look at the trend and you should look at the momentums. The trend, the momentums, and the candle. You see this kind of situation. The trend, the momentums, and the candles. Okay? Look at the trend, the momentums, and the candle. So for better, if you want to have winning ratio most of the time, or you want to continuously having a winning trade all the time, you should always wait for the right moment. When you master all this, then you can start trading with each candlestick. So wait for the right moment like this, and see this candle come to this level. It got rejection because there are some buyers. It got rejection from buyers. The next candle go up. Here also, this candle close at that level. This is a hammer candlestick. It closed at the level at the resistance level. That's why I see a seller's entry. So now you can see a two hammer candlestick, a sign of reversal. Like the first class, we talk about some reversal candlestick, a sign of reversal. Hammer candlestick at the level, reverse the market. Again, hammer candlestick again, still reverse the market. Like this one, this is a buyer's area. This is a support level. Inverted hammer candlestick, reverse the market. So you should always take note of these candles that form on the trend, on the support and resistance level. Support and resistance level. This is the resistance. You should wait for a reversal candlestick to form before you place your trade. This is a Mariposa candle, form at the support level. Buyers enter. But yeah, you know, let me tell you the psychology behind this. After this bearish, you still saw bullish, bearish again, buyers entry. This one, let me explain to you what happened here. I think I've explained that before. What happened here is because, number one, this is, if you look at the left side, you can see some buyers entry here. Buyers entry, buyers entry, buyers entry. So from here, if you want to draw your line from here to this level, it's the buyer's area. And what happened? This candle closed at the buyer's area with a rejection from buyers. And then it got rejection from buyers at this level. So that means he managed to shift the buyer's entry from this level to this level. So when you are trading and you saw this kind of market situation, always check what happened in the past. That if you see so many levels like this and you now saw a separate wick that closed below this all these wicks, that is a new low. That means that sellers form a new low. It creates a new low at the buyer's area. It creates a new low at the buyer's area. That means after this bearish candle, the next candle will be a bearish. That's why I seen the bearish candle. And now, because of this strong rejection, so I can see very well. Because of this strong rejection from buyers, the buyers, and this candle close here, the buyers still want to go more up. But on reaching this level, you can see a seller's area. Seller's area. But on reaching this level, the seller's area here rejects the market, and then it closed as a red. Closing as a red, it closed at the buyer's area, previous buyer's area. You can see it closed exactly at the buyer's area. That means the sellers are here, the buyers are here, and the buyer's entry point is here. And this candle close at the buyer's area. That's why I see the next candle forming. When you see this kind of market situation, don't doubt anything. Just place your trade with a confidence. Most of the time when I see this market situation, I will not think of anything. I will just place my trade. I know that the buyers are here and the sellers are here where the wick enter. I will just place a call option. I'll just place a call option here. So if I see even that the sellers still want to go down, reaching this level, it is better for me not to look at the market chart. Either I close my laptop or I just face anywhere. But if I want to study and know that I'm very sure that this candle will form a bullish because of my analysis here, which is buyer's area here, a strong rejection. So buyers try to form a bullish here, but fail on reaching this level, it failed because of seller's area. The seller's area reject the market. Then this candlestick close as a weak candle and at the buyer's area with again a rejection. So it means that from this buyer's area, buyer will still form a bullish candle. So I will just place a call option with confidence. And what happened here? This candle closed exactly at the seller's area. You can see this is seller's area with also a rejection, a strong seller's entry, with also a rejection from sellers. And the candle closed exactly at that level. So I will just place a put option. And then that the market is now in a ranging mode like this, in a ranging mode. Then this candle also closed at the buyer's area with a rejection from buyers. I will just place a call. Then I will have it in mind that this is a buyer's area. This is next level, a seller's area, not buyers. This is seller's area, next level. And I saw this candle close here with a strong selling pressure, strong buying pressure, rejection from buyers. And again, and look at the trend. The trend is still, I have so many reasons why I will go with buyers. The trend is still uptrend. Yeah, the trend is still uptrend. I have so many reasons why I will go with the buyer because the next level is here, and this can form at the buyer's area, and also the trend is still uptrend. So I've just placed a call option with confidence. Then I will not think it twice. I will not think twice. Then when I place a call option, I look at where this candle form, where this candle close. Once I look where this candle close, most of the time, this is one thing I've told you most of the time that when I see this market situation, I will not just say anything. I will just place my trade. Then I will start telling you that this is the reason why. But that is not the strong reason why I place a put option. The strong reason why I place a put option is this. This 1-2 move. 1-2 move. Once I see it like this, I will not need, there's no need for me to draw the line again. I will just look at this candle. I'll just place a put option. So some of you will be saying this is a level and this is a breakout. Why did I place a put option? But you never know that I have already saw the market structure, which is like this. The market structure, which is like this, a 1-2 move. So a mere looking at it, I already know where I will connect the line. I'll just close it. I'll just place a put option. So this is not the level I'm following. I'm following the 1-2 move, which we learned yesterday, 1-2 move. So from this level, I'll just place a put option. And look at it, this candle also show a sign of reversal because this is a strong candle. A strong candle is a sign of reversal. Okay, a strong candle is a sign of reversal. It reversed the market. And also it broke the previous seller's entry point here. It broke the seller's area. You see the seller's entry point. It broke the seller's entry point. That's why it's in the this candle formed a bearish candle. Okay, 1-2 move accuracy is when you have the first connect, when you have the strong level, and then you look for the second move. Like now, this is one. Let me indicate that. 1-2 move. That's why I call it 1-2 move. I connect it from this level to this level and move. I will not just connect it with any other level. Once I see 1, 2, then I saw a strong movement, it means that the next level still be a move. Like this one, like the downtrend on, like the downtrend also. 1, 2, and I saw a strong move. So it means that from this level, if the candle will close at this level with a rejection, I will place a call up there because already I have already saw a strong move. So 1, 2, move. 1, 2 move is when you are connecting 2 levels, at least, not 1, at least 2 levels. And you should not just force yourself to draw it. Don't say maybe because the line is here. Don't say because this one. Don't force it. Don't force a trend line. Let's say this one and this one. Then you want to force it to maybe to be connected to this level. This from here to here. And you want to force it to be connected to this level. Don't force it like that. Even though you do it like this way, it's still correct because it's still touching one of these reversal candlestick. Still touching one of these candlesticks. But you should not just force it. Maybe from this level, you want to connect it to this level. You now bring it all the way down here. So it's still correct, but most of the time it won't work. So you should not just force a level. You should not just force yourself to connect each level in the chart. Just follow the 1, 2 move. Like now, if you look at the chart like this, you use both. You use both. Like this one now, I have already seen this 1, 2 move. What I will do, just place my line here. Take for example, let's say the price is here. Let's say the price is actually here. And I see this 1, 2 move. What I will do, I'll just place my line here. Connect it. Okay, let me use the other one. Connect it like this. Once I place my line here, and the price is here, so I don't know what will happen here. One thing I will do is zoom in. You can see the candle close at that level with a rejection. That's why the next candle comes. And you should not just say this candle will still go down. That is not how to trade with the trend. With trading with the trend, you need patience. So once you place a put option and you want this trade, wait again for the candle to come to that level. With a rejection, place a put option. Wait again for the candle to come to that level with a rejection and place a put option. Again, come to that level with a strong body, that is a sign of reversal, place a put option. Here it broke the level without rejection, with a strong body, with a strong candle. Next candle form a bullish candle, but a weak candle to place a put option. Strong candles, a place a put option. So that is how to trade it. Now, there's one thing, some of you will say, this candle broke this level, still seller center. But why that this candle broke this level, buyers enter? Some of you will have placed a put option here because the first one already showed that sellers will enter. Then the second one, again, it broke the level, place a put option. But what happened? The reason here is that, number one, why this one reverse is because we only have one candle here. Only have one bullish candle. That's why it reverse. So there's no buyer's power to go with buyers in the next candle. There's no buyer's momentum to go with buyers in the next candle. But here we have a strong bias movement like this one. Strong bias movement, strong body, with strong candles, the strong candles movement. So buyers will not easily will not easily surrender to the seller to enter the market. At least they must show a sign of weakness before they reverse. So that means that the next candle will be a bullish. So you do not reverse whenever you see a strong bullish. And this one also you didn't reverse. On the candle that form is very small, is smaller to the previous candle after a buyer's movement. So the next candle will be a bullish. This one also, reason why this candle didn't reverse here because number one, a strong candle, sellers are not in power in the market again. After a strong candle, sellers are no more powerful. It's just that when this candle is forming a strong candle, the sellers are in power. But now, a strong candle, a whole strong candle formed. After that, you saw a bullish candle. So it means that the sellers now are not powerful again. And then a bullish candle formed. So you just place a call option here. After a strong candle, this candle is supposed to be a bearish, but instead of that, it formed a bullish. So buyers will continue the market. It means that buyers are interested. And again, this candle has upper rejection, lower rejection, a spinning top. Let us see the next candle close as a bullish. So this is how you can trade with the trend. Follow the trend. Don't go against the trend. Whenever you see a downtrend, always look for put opportunities. Whenever you see a uptrend, always look for call opportunities. Don't go against the trend. If you go against the trend, the trade will always also go against you. Okay. Now the second one is sorry, reversal candlestick and continuation candlestick. So we have said that in the first class, the reversal candlestick and the continuation candlestick. Reversal candlestick are the candlestick that form at the level or at the support level or resistance level. And what are those reversal candlestick? Number one, hammer candlestick. Number two, spinning top. Number three, inverted hammer. Number four, hanging man. Number five, and so many things. These are reversal candlestick. Now, all these candlesticks I've mentioned, they can also be used as a continuation candlestick. A continuation candlestick. How can they be used as a continuation candlestick? Maybe they form in the middle of the trend. Now look at this. Let me show you a strong trend. A strong trend. Now look at this hammer candlestick. It formed here also. This is hammer candlestick. Hammer candlestick. It formed in the middle of this bullish trend and bearish trend. And where is the next possible of reversal? It's right here. Because here we have a strong bias. And this candle formed at this area and they close here. Still, the candle is still far. You might be saying this is a bias entry. Yes. This area. This is a bias entry. But this market will not easily reverse because of this strong sellers entry. So once you see a strong sellers movement and you saw a bias entry, that is a minor bias entry. The market will not respect this level. So it is going to respect the strong bias entry. This is a strong bias entry. So how do you know a strong bias and strong sellers entry? Number one, this is a strong sellers entry. A strong sellers entry. This is a strong bias entry. A strong bias entry. Any level that has two or more candles that reverse, two or more candles after a reversal, is a strong seller or strong bias entry. This is just a minor bias entry. but this is a strong bias because it has two candles. This one also a strong seller's entry, strong seller's entry. This one is not a strong seller, just like a, let's say, though it's a strong seller's entry, but don't count this as a strong seller's area. At least two candles, minimum two candles. This one also a strong seller's entry. This one a strong seller's entry. Now, as I was explaining, this hammer candlestick form at this in the middle of the trend. There are also some buyer's entry here, but it's not strong. The strong buyer's area is here. And this candle is still far from the buyer's area. So you should just place a put option with a confidence. Because number one reason is this strong bearish downtrend. Number two, a hammer candlestick. Number three, a new low. You can see, look at the previous low. Here. And this candle make a new low, a sign that it's still continuing the market, and the next level is here. So you have so many reasons why you should go with sellers. Number one, hammer bearish momentum. Number two, hammer candlestick. Number three, new low below previous low. And number four, next level. So in this type of situation, you just place a put option, confidence. So once you place a put option, you stop. If you can't analyze anything here, you just stop. If you feel, let's say you feel difficult to analyze what will be the next candle after this strong candle, just stop. Don't trade. Wait for the right moment. This is what will help you have winning ratio in the market. Now, as a reversal candlestick, look at this candle. Look at this candle. A pin bar. Whenever you say this is a doji, this is not a doji, it's a pin bar. A pin bar happened to be at the resistance, and what happened? It reversed the market. How do you know this is a resistance? Check. Let's check. This is the resistance here. So let's see if the strong level. I think this one. Yes, it's a strong level. And so you can see also it's a resistance. And see resistance is reverse market. Here also it reversed the market. You can see so many reversals at this area. Yes. Yes. If there's no strong level, you continue. Yes. Yes. Okay. You can see so many reversals. You can see so many reversals at this area. And at this area, I'm seeing a reversal candlestick here. A reversal candlestick. It doesn't matter, maybe it touched this level. Already, you can see a rejection here. And again, a reversal candlestick. If you check in other broker, this candle that you're seeing here is a bearish candle. Go and check in others broker. You see that this candle here is a bearish candle. That's why I say binary option is different from IQ option is different from others broker. That's why most of the time you are having a losing trade wherever you think that the next candle. But if you understand the market, if you understand the behavior of the market, you can predict the next candle easily on IQ option. So this candle you are seeing here is a bearish candle. This week candle is a bearish candle in others broker. But when I see this kind of situation, I know that this candle is formed after a strong bullish movement. That's why this candle is formed. That is strong bullish movement at the resistance area. So this strong candle and a bullish movement will not form a seller's area, seller's entry on this reversal area. It will not form. But in other broker, you will see a bearish candle telling you that after this rejection, the next candle will be a bearish. So that's why IQ option is different from other broker. IQ option, you only follow the momentum and the trend. So this candle is now a weak candle, a reversal candlestick. That's why I'm saying that at this level, the market reverse. You can see the buyers try to push the price higher here. The buyers try to push the price higher on reaching this level, reverse. Here also you can see a reversal candlestick at the support level. If you check in the past, you will see that this is a support level. And you're seeing a reversal candlestick, a spinning top. So it reversed the market. And don't get confused here. Don't say if this is a red spinning top, will it continue the market? It will not continue, and it will continue. It depends on the market situation. If you see at this market situation, if you see a red spinning top here, it will reverse the market, not continue. It will reverse the market because this is a support level, it's a support area. And at the support area, you can see a bullish spinning top, so it reverses the market. Here also, if you see a bearish spinning top, it will also reverse the market because it's a support level. And if you see a downtrend, let's say uptrend, let's say you see uptrend like this, like this, like this, like this, then and this is seller's area. And at the seller's area, you are seeing hammer candlestick, telling you that the next candle will go down. Number one, if the next candle forms a bullish candle, it's because of maybe the strong momentum. Because after this hammer candlestick, the next candle is supposed to be a bearish, but the market still formed a bullish candle. Number one reason is that because of strong momentum, and again strong uptrend, and again this candle contribute to that, making how many? 3. That's why they form a bullish candle. But if you see a hammer candlestick here, a strong level hammer candlestick, and the momentum is not that strong, so it will reverse the market. Let's see if we can see examples of such. This chart. Let's see if I can see anything about that. Now look at this one. This one. Let's see what happened in the past. Financial levels here. Okay, now this is the actual level. Let me show you why I placed this line here. I check this line. This is the highest point, and the body of the candle. Also, you can see that the market also respecting this level so many times. So that is why, as you can see here also, respect. Here also it respect. So it's a strong level. And the strong level, I'm seeing this hammer candlestick. Hammer candlestick. So some of you will try to place a put option, but it will not, you will not place a put option here. Reason is because, like I said, a strong, you can see a strong bias movement. One. Number two, rejection from bias. Two. And number three, a weak candle compared to previous bullish candle. This bullish candle is very strong and this one is very weak. They are not the same level. That is number three. So I will just place a call option. Now, if you want to place a put option, number one, level. Number two, hammer candlestick at the level. So why should you not place a put option? You only have two reasons to place a put option and three reasons to place a call option. So you will now go for these three reasons with confidence. Just place a call option. So at this time, this hammer candlestick will not work. You can see this you can see this is a hammer candlestick. This is hammer candlestick. So at this time, it will not work because we are having a strong, but you can see very strong bias movement. And again, the last candle that formed is also a strong candle. Also, we can see some rejections of bias entry. So it means that see buyers still want to go more up. A bias movement, one, rejection from bias. There's some bias entry. If you check that on 5-second charts, you see that this rejection, you can see some bias, you will see some bias entry here. Bias entry after a strong momentum, and the body of this candle is not that strong with the body of this bullish candle. I've just placed a call option. Confidence. So that means here this hammer candlestick will not work as a reversal candlestick. It works as a continuation of this bullish trend. Now, there's one thing I want to show you guys how to find a momentum. Now, if you want to trade on a momentum like this, maybe you find this opportunity to be placing a call option here. Check on the left side. Anything that happened on the left side will also happen on the right side. If you see a momentum on the left side, you must see a momentum on the right side. So anything that happened here will also happen here. So we have so many of them on the charts. I'll show you. You can see this one, a strong bias. And what happened? See a strong seller's entry. You can see, and here again. And here you can see a strong seller's entry, and here again we have a strong buyer's entry. So it is not that you continue placing a call option until the candle reach where the seller's entry starts. No, you should focus on the candles. What is the candle telling? Because the candle is telling you what is happening in the market. I don't know what's wrong with the network. Okay, this is how you can follow the momentum now. So when you are when you are trading on momentum, first check what has happened on the right side. If you see any momentum check what has happened on the left side. If you see any momentum on the left side, that means there must be a momentum on the right side. Whatever happened on the left side will also happen on the left side. If you see like this one now, a strong momentum, what happened here? You can also see some bias momentums here. Some bias momentums. So whatever happened on the left side will also happen. If you see a choppy market, never you trade a choppy market. How do you observe a choppy market? A choppy market is something like this. after a strong downtrend. A choppy market usually happens after a strong downtrend. It's just like consolidation area. This from this area, this is a choppy market. Never you trade on this choppy market. Choppy market also, it happened, let's say it happened 94% on OTC market. After a strong downtrend, the market will now start consolidating for a while. So you are not sure if the market will go up or the market will go down. So you try to avoid any choppy market after a strong trend. Okay, they happen at the end of the trend. So this is what you need to observe in the market before you place your trade. Don't place your trade, and you should not place your trade according to what you see, but place your trade according to the market. Now look at this. The next one is observing the momentums. It's just what I just said now. You observe the momentums on the left side. Again, there must be a momentum on the right side. Now, observing the chart pattern. What are the chart patterns? Number one, if you see the market is like this, green, red, green, red. That means the market is forming like this. Green candle, red candle, green candle, red candle. So once you observe the patterns like this, you should know that the market is respecting this pattern. You too must also respect the pattern. And you should respect the pattern in such a way that the market also is respecting the pattern. Most of the time, we see a green red candle. Most of the time, you lost your trade because you didn't observe the structure of the pattern. Let's say this is a red candle, market is forming red, and again a green candle, again a red candle, again a green candle. So I will explain that. A red candle, a green candle, a red candle, a green candle, and the market is here. And you want to follow or observe this pattern, but you didn't know that the market is respecting another rules in this pattern. But you don't know that the market is respecting another rules in this pattern. The market is also respecting this minor uptrend or a channel movement. So it means that if this candle is a green, is a red, so the next candle that will form will be higher than the previous candles. And then the candle close here. It means that the market is respecting this pattern and this market movement. So you should respect it. And maybe the market is trying to break this pattern. Immediately the market starts reversing like this, a red candle, or again a strong candle. Still red, green, red, green. Let's say red, green, red, green, green, red, green, red. That means the market now is now forming like this. That means you too also should be following the market rules, following the market structure, the pattern. Now, I got a question now that how many patterns? Let me check the question again. That how many candles form the pattern? Number one, let's say 3 candles. Maybe after a strong downtrend, and at the strong downtrend, a seller's entry, a seller's entry, seller's entry, seller's entry, seller's entry, seller's entry, seller's entry. And here, the last candle form a strong trend. The next candle that follow is a green candle, and the next candle that follow is a red candle. So you should know that the pattern has already started with this red candle. So it means that the next candle will be a bullish candle. So the pattern has already started. So you should first look at it, a three candles. The first one, maybe in a downtrend, after a downtrend, red. Second one, green. Third one, red. Then you should know that these three candles have already started the pattern. So you're just placing your trade according to the market structure, according to the market pattern. Now look at here. Look at this one. After a strong uptrend, here, what happened? A bearish candle. Next one, red. Next one, a bearish. So this pattern has already started. This pattern has already started with this bearish, bullish candle, followed by red. Again, a bullish candle, followed by red. And what happened? You should not be saying, once you find out the three candles that start the pattern, once you have a winning ratio or winning, once you win that market, or once you place your trade and you win, stop, don't trade. Give yourself some rest, be patient, and see if the market will continue that pattern. If the market will continue that pattern, you will see a confirmation. After a strong seller's entry, again a red candle, again a green and a red. So after you see these three candles, you place a call option, and then you won that trade, stop. Because you didn't know if the pattern is going to continue or not. So you should stop and give yourself rest. Yes, you can apply it on OTC market. Even OTC market even is even crazy about it. You can see mostly OTC market form it mostly on the chart. Stop. Once you see the bullish candle, place a put option, and you observe when you stop and you place a bullish candle or place a call option, you want this trade, and you stop that the next candle is still red. That means the market is still expecting. Then you now saw three candles that form. Just place your trade. After this bullish, you place a put option, and you want the trade. Now stop. If you see the next candle that form after this candle is a green, it means that the pattern still want to continue. You can see here, look at the pattern movement. Look at the pattern movement like this, and again like this. Here also, like this, to this level, and like this. So the market is also respecting the movement. That means you should not respect the market pattern and the movement. Respect them, market pattern and the movement. Look at this bearish candle. The bearish candle form here. You might think that if you come to this level, I'll just place a put option because it should go down. But you didn't know that the market is moving like this, uptrend movement. So you should observe the market pattern. So this is what will make you have some winning ratio. Start from the three candles. After a downtrend, like this one, after a downtrend, this candle form here, and this candle form green. And if this candle will form a red, the next candle will be green. Because these three candles, with this one that will form a red, has already shown us that the market will start obeying the pattern. Okay, this is how you can observe the pattern. Another pattern is this. Another pattern is this. Observing the pattern. Look at here. Okay, let me choose the right one. can see this momentum I'm talking about, a strong seller's momentum and again a buyer's momentum. So because of what happened here, buyers also copy them. Now look here. This is another pattern. This is another pattern. 2 red, again a 2 red, again a 2 red. So whenever you see the first 2 red, the first 2 reds, you should know that anytime you see second red, you just place a call option. That means the market is expecting after 2 red, a bullish, a buyer's entry, after 2 red, a buyer's entry. So in observing this pattern, you should see at least two. You see at least two formation before you place your trade, not only just one like this. Not only just one formation like this, then you say you want to follow the pattern. No, you should know that after these 2 red, a green again, another time, a 2 red again appear before green. So you should know that the pattern has just started. It means that the next one, if you see any 2 red, place a call. And once you place a call, you stop. Don't place again. Just rest yourself. If you have to place your trade on that pattern that day, then you should wait anytime you see another pattern move. Okay, just rest yourself and then wait. Now look at this one. Like I said, that observing pattern is very common. Now look at this, a 2 red, and here after you seen a 2 red, now confirming that okay, the market will form another 2 red, but you are wrong. The 2 red here has not completed its own pattern. At least you must see another 2 red. That means if another 2 red appear in the future here, the next candle will be a bullish. But here we only have 2 red. The next one didn't show us the confirmation of the startup of this pattern. That means we are not trading. Then you go and look for opportunities. You go and look for best opportunities where you see all those patterns. Like this one, we only have 1 green in the middle of seller's entry. 1 green, 1 green, 1 green. So once you confirm that in this level, at least 3 times, you should know that after 1 green, next candle will be red. So you should rest. Don't trade again. That means you have already won this trade. And again, it happened the second time, but you don't trust this one if it's going to continue like this nonsense, this bullish here. So after these 3 times, you should now trade or look for any strong one bullish candidate place your trade. So don't try the 4th time here. Okay, this is how you can observe the patterns in the market with confidence. Once you observe them, then you place your trade. Like here, we have 1 red, 2 red. So it is not, the pattern has not yet complete. That means either you have a 1 red again and 2 red, then you now place the trade according to the pattern. Here we have 1 green, 1 green, 1 green, 1 green. But what happened here? A weak green. So here you have already confirmed the patterns here at least 2 or 3 times. You have already confirmed the patterns here. That means anytime you see a 1 green, you place your trade. Then we have 1 red, 1 red. So you have already confirmed the patterns at least 1 times or 2 times. That anytime you see a 1 red, you place a call option. There is have 1, 3, 2, 1, 1. So the pattern is not moderate here. We have 1, 2, 1, 3, 2, and 1, 1. So the pattern is not here, it's not moderate. So if you have to go with the pattern, if you say you see one red and one green here, and a one green and one green, then and you saw a one green, and if this candle goes as a bearish, as a bullish again, that means the pattern is not good. So at this time, you should not trade like this. Don't trade like this whenever you don't understand the pattern, because this is one green, three green, two green, one green. So it is not complete, except you must see a pattern that has the same movement, the same move, before you can place your trade. Now look at this one, three red, the pattern has complete. But what happened here? The pattern didn't complete, because here it is showing that this area, the patterns is not respecting, the market is not respecting any pattern. The market is having a choppy pattern, a random pattern. Three green and three red, three red. But here the market is not respecting, because here we have one green, three green, two green, one green. So the market is not respecting, it's not arranging the pattern for you to predict the next candle. So at this time, you should not place your trade. Here we have one green, two green, one green, one green. Here also the same thing. The market is not respecting the pattern. So this is how you can, once you observe the pattern, you can also have some winning ratio in pattern observation. Also have a winning ratio. You can also increase your winning ratio. Pattern observation. Like this one, we have two candles. Here, two candles. The candles, the pattern is started here. Because here we have, you can see a very complete, yeah, the market even make it clear. Very complete pattern. We have one green, you get one green. So after this one, confirmation, then you place this one. Yes, after a trend, after a strong trend, maybe uptrend or downtrend. This is like this one. This is after uptrend. Then the pattern starts forming. One green, one red, one green, one red. So it means that anytime you see a one green, place a put option. Then you rest. Then this one also, two green, two green. So anytime you see a two green, place a put option. You rest. So the market now is making this pattern to be easier for you to place your trade. Okay. So now you can place your trade here, but you should not trade on every candlestick, except if you have some experience about the market, or you can place your trade every candlestick. So this is how you can observe the patterns movement in the market. Once you observe them, your winning ratio can also be improved. Okay. So I've covered up 2 hours class. Then they have covered up the trend, trading with the trend. That is, anytime you see a minor trend or a major trend, you should always wait for the market to reverse to the buyer's entry point, the place of trade. So in uptrend, we have something like this. Higher highs. This is the higher highs, higher low. The market is forming like this. This is what we call uptrend. Market is moving like this. This is an uptrend. This is the higher highs, and this is the higher lows. Higher highs, higher low. Higher highs, higher low. Higher highs, higher low. Higher highs, higher low. This one also. Okay. Okay, this is how you can trade with the trend. No problem. Okay, if you have any question, you can ask maybe in the group chat. Or if you have any question, you can ask directly. No problem. Okay, this is how you can trade with the trend and how you can observe the market movements. So So you should always follow the market structure. You should always follow the market rules before you place your trade. And you should not just be placing your trade anyhow. Make sure you have a strong confidence, a strong evidence, a strong reason before you place your trade. And once you place your trade, take a rest. Don't place your trade all the time. Just take a rest. Look at the markets. Look at what the market is doing. Then, and anytime you see opportunities, then you place your trade. Then this will now give you, this will now help you to improve in placing every candlestick. So this is how I learned to trade on each candlestick. I learned how to trade on each candlestick after I already learned how to place my trade with patience. Anytime I see a opportunity in the market, I place my trade. So I know that anytime this market will form like that, I will know what to do. Okay, now, like how many trades per day? For me, some of you are saying that I took 4 trades, but 4 trades is not what I took. I took okay. Maybe I will say that tomorrow. I'll say that tomorrow. How many trades to take per day? I will say that tomorrow because I got some requests now to close the meeting. Okay, guys, thank you guys for attending the class. And I hope that you enjoy the class today. Tomorrow is the last session. So tomorrow is going to be 2 hours. And if you have any question, then you can ask. If you have any question, then you can ask. And if you have anything to discuss in the group, then you can do that as well. So this will not be a last lesson or a last class for us. We still be having some classes. That will be anytime I feel like less busy. But this one, I just take it as a compulsory class. Okay. So anytime I will just call upon any day that okay, we are having a class today, so you should get ready for that. So not only this time, not once you'll be having this class. So all the time, most of the time, let's say twice in a month. Okay. Okay, guys, thank you once again, and thank you for your participation and for your audience. So if you have any question, once again, ask. Okay, thank you guys. Thank you. Goodbye.